Really, this was an economy that was hoping they could get away with this winter without a recession. And as we discovered today, not so. The revised down quarter on quarter, minus 0.3% from flatlining. That is quite a, that's not an unsubstantial revision downwards. And it was all down to the consumer. The consumer spending less on goods, spending less on food and beverages, spending less on furniture, on shoes, new cars, you name it, spending less across the board. And it's really a change in mood in Germany that we've seen in the data over the last quarter and really the last month. This week we had downward revisions on manufacturing PMI, or I should say manufacturing came in a lot weaker than anticipated. And that's been in contraction since July. And you really see this divergence between the manufacturing side of the economy and the services. And the question is now, with this GDP print, do you see the consumer starting to pull back that has stayed relatively strong throughout? Inflation is still at 7% here in Germany. We had PPI. The only things that have beat have been PPI and services, which have been above. So for the ECB, this is a bit of a challenging line. We have manufacturing slowing, consumer spending less on goods, but still services supporting that. And going into the winter, you have to ask the question, were we a little bit complacent in the optimism, having survived the winter, doing all right on energy, while a lot of the risks have not faded yet? So going into the winter, if you have a consumer where you have inflation and rate hikes that are biting, consumer with less money, really it doesn't paint a favorable picture going into the winter of 2023.